It's question time at Alhambra Investments, and CEO Joe Calhoun is waiting in the wings for the question that Steve Brennan's got today.
Well, Joe, in your recent market commentary, you stated AI might be overdone. Tell me it ain't so. Everybody's so excited about it, but what's up with that, Joe?
Uh, yeah, I think that it is certainly some hype going on there. Look, we got earnings out of Nvidia last week, and they were good. I mean, I think it was pretty much expected that they would be good, and they were. The stock actually was only up 3% on the week, so I think that there was some hype there already built into the stock. I guess you could say it has gone up a lot. And then, I mentioned too that I think that maybe there was a lot of the software stocks took a hit last week. I think some companies are maybe shifting some spending around, going from software that they might have spent money on software, they're going to spend it on AI stuff. But I just think in general, I think another place that's interesting was the utilities. Utilities have been leading on the sector at a sector level for a while now, and this whole idea that AI is going to take all this power, all this electric power, and so you should buy utilities. And I noticed, I read through, we're subscribers to FactSet, and I was reading through FactSet's reports. They report on earnings and so forth and revenue. You've had 67% of the utility companies have reported revenue less than expected this quarter. Now, that tells me that the analysts have gotten ahead of the game here. The analysts have overestimated what the impact is on these utilities. But I think just in a more general fashion, I just think I wonder how much how much AI is going to add to the bottom line for these companies. I mean, they're spending a lot of money, all companies. And listen, you there's another, go and look at the word count and conference calls. How many companies are talking about artificial intelligence or AI? And they're all talking about it. And some of them are actually spending money on it, and some of them are just talking. But they're not getting much for their money just yet. And I really wonder how much they're going to get in the end. So, yeah, I'm a skeptic of most things new that come along because I'm an old guy. Although I was skeptical of the .com stuff too, so maybe not so old. But yeah, it's just it just seems like that there's more sound and fury there than there is actual results.
Yeah, and I think the .com is, to me, a good analogy, one I lived through, where in 2000, it was going to change everything overnight. Everything was going to be different pretty much overnight. And things did change. I mean, Amazon's huge. We do a lot of stuff over digital, but it didn't change everything, and it didn't happen overnight. It happened over many, many years. We're still going through the transformation. And I personally think, AI is going to be a thing, but it isn't going to be as overnight, as revolutionary, as big as a lot of the hype has maybe become.
Well, yeah. Well, look, here's my modus operandi when it comes to bubbles, and I don't know if AI is a bubble. Maybe it is, maybe it isn't. Look, you can justify a lot of the rise in Nvidia stock because the earnings have gone up so much. I mean, it's stunning how much more business they've added. But they've also had booms and busts before in Nvidia, by the way. I mean, they did have a boom in crypto mining that crashed, and the stock got clobbered. It wouldn't surprise me if you see something similar happen to Nvidia. But going back to the idea of .com or whatever, I've been in this business for 30 years, and I can remember, multiple, call them bubbles, call them whatever you want, hyped up sectors. First one I remember really distinctly was biotech in the early 90s. And man, I mean, anything that had bio in the name went up. And, but if you waited for it to go up and crash, because it did, a lot of those companies didn't make it. And what you do is you let them go, because you can't tell who the winners are this early. There's no way to know which one of these companies is going to be the winner. Maybe it's Nvidia, maybe it's not. There are some other semiconductor companies out there who also have some smart people. Maybe they'll be able to compete with Nvidia. I don't think people should assume that Nvidia is going to get all that business. But, if you go back and look at the biotech thing in the early 90s, all that stuff crashed, and then you got a few really good companies out of that. You got Genentech, you got Amgen, companies like that have lasted for the very long term. But you didn't know about which ones were going to win until they started getting drugs approved, and you started to see who was going to survive after the bubble crashed. The same thing happened with .com. listen, a lot of those companies never made it, and a lot of the companies, even the ones that were hyped the most, look at Cisco. You could have, I think, I could be wrong, but I'm pretty sure you could have been sitting in money market since Cisco's peak and made more money. If not, you could have certainly been sitting in the S&P 500. I don't think it's beating the market. So I think the best way to play these types of things is let the bubble inflate. It's going to, because there's hype there. It's hope and greed. So let it inflate, and then it'll crash for some reason. And when it does, you pick through the debris and you figure out what's going to survive. And that's what you want to own long term. Because, we don't want to be traders. We don't want to own something for 6 months and have to sell it. And even then, it's iffy if you can figure out which one's the right one. So I mean, look, is it .com? No, I don't think it is, because it's not as widespread as it was back then. But it is definitely having an impact on the markets. We'll see how it finish it up, put it that way. I think the finish is more interesting than the start.
Yeah, and just one other thought here. I think this is an extended conversation, but to me, one of the technical hurdles that maybe isn't talked about so much, and we talked a little bit about this, is GIGO, garbage in, garbage out. For these technologies to have any chance of working, you need quality, uniform, comparable data, and that is something the real world is not great at serving up. And it does seem maybe like that is a bigger technical hurdle for widespread kind of revolutionary, game-changing. The world is going to be completely different kind of technology here.
Well, look, if you think about this, I mean, I thought about this a lot. Obviously, everybody has, I guess. I mean, it seems to me that what's going on here is more of a hardware thing than a software thing. The software gets a lot of the hype because of OpenAI and so forth, and Nvidia gets the hardware side, I suppose. But this is a hardware, innovation. The models that they're using, the large language models, those have been around for a while, and machine learning and artificial intelligence has been around for decades. But you now have the processing power to do it quicker. That's all that's really happened here, is you can do it quicker. There's been some improvement in the large language models, but if you think about it, I mean, these things have been around long enough now where you've essentially trained these things on the entire internet. You talk about garbage in, garbage out. Has anybody been on the internet lately? There's a lot of garbage there. And you're right. If that's your input, what's your output going to be? There's some crazy stuff out there. Well, that's part of your output now, because it was part of your input. I question really where the application is for some of these large language models. Now, I do think that when you look at an area like entertainment, like Hollywood, I think that is an area that could see a lot of innovation because of artificial intelligence. I said something to you earlier. We see these things applied in areas like, we've seen how many stories have you read about an attorney who turned in some legal brief and cited some cases in there that were made up by the AI that he used to generate the brief. Well, in Hollywood, that doesn't really matter. It's kind of an advantage to be lying. So it's make believe. That's what it is. So it's okay to be telling stuff that's not true, but it's not okay in the real world. And so, yes, maybe it has a huge impact on Hollywood and entertainment and things like that. I'm not sure about the rest of the world. I think you still got to have human intervention. And I will share what I said to you earlier too, when we were talking about this last. Here's a business model for you. The business model is you're going to have humans. This is going to sound crazy. Have humans that actually go and read the things on the internet to find things that are actually written by people that are actually relevant and true. In other words, someone who curates articles. Oh, wait. I think there's some people that do that already. Listen, I think that might become more important, that you have a filter. Hey, I'm going to filter through all these things, and I'm going to show you the articles that actually make sense, that aren't lying to you, that we've vetted and said, hey, these things are true. I think that might be something people want, because you don't have the ability to go and do that stuff on your own all the time. So anyway. I think it may be a little overblown. I think it's going to be interesting to see how much. Look, right now, these companies are spending billions, and their return on investment right now, as far as I can tell, is squat. We shall see how much more above squat it gets. But I think you can take your time if you want to invest in AI. And you know what? I'm going to say one last thing on this, and then we can wrap it up for today. It seems to me that if AI is going to have an impact, a large widespread impact, then kind of the obvious thing here is that it would kind of level the playing field between companies of different sizes. Look, it's been very difficult for companies to compete with the mega cap companies that exist in the United States that kind of dominate our economy. But wouldn't AI, if it really has wide scale implications, wouldn't it kind of level the playing field? Wouldn't that mean that small and large cap companies now would have an opportunity to compete with large cap companies on a more level playing field? Maybe you take those large or small and mid cap margins of 6-7% and raise them up to the large cap level at 11% or 12%. That could be an opportunity on a wide scale basis if it really works. We'll see.
Great conversation, and we always want you involved. So if you've got questions you'd like Joe to answer, put them in the comments section down below.